Good evening. Welcome to another edition of the ShadowTrader Video Weekly for Sunday, October 17th, 2021. I'm your host, Peter Resnicek from ShadowTrader.net. From Lupe Fiasco to Jay-Z. What exactly does that mean? The title, of course, is a reference to this guy, Lupe Fiasco, and it is something that we talk about in our weekly options advisory all the time, kind of like an inside joke amongst the people who follow my advisory. Basically, what a Lupe Fiasco is, it's our term for a trade that has potential to basically turn into a fiasco. We started just calling these trades potential for fiasco, and then I decided to call it a Lupe Fiasco one day just in jest, and the name kind of stuck. So amongst the people who are subscribed to Weekly Options Advisory, we often say things like, you know, don't let it turn into a Lupe or avoid the Lupe. Obviously, a Jay-Z, him being the top of all A-list rappers, and Lupe Fiasco being, you know, somewhere much, much lower, a Jay-Z is, of course, a good thing, means a trade that has potential to blow up into a huge profit. So the title of the video this week is apropos actually for two reasons. One reason on a more micro level and one on a more macro level. For the first reason, we actually avoided a really large Lupe Fiasco and ended up turning it into a Jay-Z in our weekly option advisory with this particular trade, which closed today. You can see solid winner in Amazon. If you're watching the market at all on Friday, you know that Amazon just ripped to the upside out of nowhere on pretty much no news that we could see. Potential rumor for maybe a stock split, I don't know, but the stock just went berserk on Friday, and we came into the session with a 3380, 3400, 3450 unbalanced butterfly. And if you know what that's all about, you can see that that can turn into a serious problem if it's not managed correctly. And on a more macro note, the market itself obviously went from Lupe Fiasco to Jay-Z, much like I said that it was probably going to do last week. If you recall in our video last week, I talked about the inverted head and shoulders forming. That turned out to build out just fine. But earlier in the week, the market was weak. It was continually selling off early in the week, and it didn't really look like at the end of Wednesday that the market was actually going to get the promised upswing, but it did. And by the end of the week, we were clearly much more in Jay-Z territory and far less in Lupe Fiasco territory. So much like last week's video, this video is going to get deep into the TA of S&P, NASDAQ, but also Russell this week, because the Russell did something a little bit interesting. And then also kind of a deep dive into market profile, which we didn't touch upon last week, just for anybody out there who still thinks that this market might be bearish, because the market profile actually has a lot of very interesting nuances in it that are kind of like playing devil's advocate to all of the bullish price action that we've been seeing. Okay, now before we get into the good stuff, a little bit of housekeeping. In past videos, you've probably noticed I've sometimes told you to send an email to asktheshadow@shadowtrader.net with the subject line track record, because I wanted to send you my track record from Weekly Options Advisory. I wanted to send you also 1 day's worth of this particular daily email that comes out each day to subscribers at 4 p.m. that basically lists all of the alerts that I've sent to people's phones and trades, what's Peter thinking audio messages, links to live sessions if we go live that day, etc. etc. Next week, I want to kick it up a notch and send you this particular email all week long. Monday, Tuesday, Wednesday, Thursday, and Friday of next week. I want to send you this particular email every day at the close so you can get an idea of what goes on in Weekly Options Advisory, see what trades I did that particular day, entries, adjustments, exits, etc. Listen to What's Peter Thinking audio messages, watch any live sessions that may have happened that day. So in the interest of making this really streamlined and easy to do, all you have to do is hit this link. Go to shadowtrader.net/track record. And when you get there, there's going to be a little box to put your email address in there. And then I will make sure you get all of these emails all next week so you can get a better idea of what we do, looking through all of the trades, all of the alerts, etc., etc. Again, really easy to do. shadowtrader.net/track record. Don't worry, I'll probably remind you of this one more time before the end of the video. All right, let's get into the TA. S&P daily chart, going to keep it really simple. I'm just going to look at dailies on the S&P, NDX, and Russell. Basically, everything that I talked about last week came true. You can see here, I said that we had potential to form the inverted head and shoulders, which would be bullish, that would take prices a little bit higher, and we ended up getting that. As I alluded to in the beginning of the video, the potential Lupe Fiasco was what was happening here earlier in the week, where the market was just kind of dribbling down lower. I can't show you this in the video, but I'll give you a tip right now to know when you should switch to the short side and when you should not. And that tip is very simply this. If you were watching the markets closely early in the week, one thing that should have jumped out at you was the fact that the tempo was very slow. And again, I don't have recording of this. It's impossible for me to show you this on the weekend when the market is closed, but the market has a speed to it. The tape has a speed to it in the ES and in individual stocks. But in this case, we're talking about ES futures and basically just the normal throughout the day price action of SPX, NDX, futures, ES, NQ, etc. You should know if you've traded for a long time, the tape is either fast or it's slow. You know, sometimes we have big, heavy down days and it's very emotional to the downside. You can see the tape is moving very fast. Everybody's just selling. It's just a sea of red. That's not what we saw this particular week. The tape was running very slow. It was constantly like basically 3 points down in the S&P, then bounce back up a point, couple points down, et cetera, et cetera. And that type of price action basically doesn't bode well for sellers. So the next time you're kind of asking yourself if a market is really bearish or not, pay attention to tempo. The speed of the tape matters. And if the speed hasn't increased, that tells you that the momentum is not there, the emotion is not there, and potentially larger sellers aren't really in the market liquidating positions, and the market's probably not going to go lower. So that's what we saw earlier this week. The inverted head and shoulders is now complete. If you recall from last week's video as well, I talked about the two trend lines, drawing them both different ways, correct? Both of them have now broken. So we've got, regardless of how you draw the trend line in the S&P, you can't deny they're both broken now. And what does that do? Puts the all-time high back into play in the S&P at least. NASDAQ and Russell, a little bit of a NASDAQ 100. Let's get into it. I left the fib on from last week. If you recall, we did a Fibonacci from the top down to the bottom. We were talking about what was the potential. Could we get to the 50 line? Could we get to the 61.8 line? So in late trade this week in the Thursday, Friday rally, notice that we did get to the 50, but we still have yet to get to the 61.8. And this is in pretty sharp contrast to what's going on in the S&P, because the S&P blew through a lot of these levels. And also, more importantly, key moving averages, which is very, very important. Notice that the 50 here, which is the red line, this is what I want to show you. The green is the 20, red is the 50. NASDAQ 100 has still not come into the 50 MA. This is noteworthy. Everything that we talk about is one data point. There's not a single thing that you should take from these videos that would make you believe or think next week, oh, the sky is falling, or oh, the market's definitely ripping to the upside. Everything has to be put together as multiple data points to create your narrative. So keep that in mind. What we're saying about this chart simply is that tech is lagging a bit. It has obviously some distance to go, further distance before it would get to the all-time high, and 50 period moving average is still looming above, which can slow prices down a bit. As you can see, we closed kind of just right at it on Friday. And we have not yet made it to the 61.8% retracement from high to low. Okay, so keep these things in mind as we start next week. And last but not least, the Russell. I'm kind of torn basically on whether or not the Russell really has a lot of influence on the rest of the markets or not. There's a lot of people who are in the camp that think that small caps basically are a leading indicator because they are more speculative type of stocks. They don't have multinational exposure. There's a lot of not so profitable companies. Still, it's a large index, Russell 2000. A lot of people think that animal spirits are sort of lifted or in play if the Russell is strong. You can kind of take that with a grain of salt. As the markets rallied on Thursday and Friday, Russell obviously did rally on Thursday, big move up. But here's what's interesting. I found it very interesting that an S&P and a NASDAQ 100 that closed very close to the high of the day on Friday, look at what happened to the Russell instead. This is the daily bar on the Russell 2000. Complete reversal, fell apart completely. Not only was not able to close above Thursday's close, but as you can see, went all the way back into range. So again, does it mean anything? Just one data point. Carry forward. And when we get into the market profile next, I'm going to show you plenty of other data points that are also all just one data point, everything coming together as part of your bigger narrative. All right, let's move along into the market profile section of the presentation. This is where you will potentially get the other side of the coin, meaning that the market may be dangerously overbought here, and we do have at least some potential that we get some sort of a liquidation break early next week, and I'll explain exactly why, okay? Markets basically move in cycles. They expand and contract from areas of larger volume to areas of smaller volume. They also do something that we call balance to excess. Excess is when you have like a expansion range type of day, and then you have a big kind of blow-offy type of top. That's excess. Balance is more when the market stays within the prior day's range and sort of balances out, okay? On the far right side of the chart, what I want you just to pay attention to real quick are all of the things that I wrote on the far right side of the chart. You can see there, top of gap, bottom of gap here, virgin point of control, top of single prints, bottom of single prints, top of single prints, top of gap, and bottom of gap, another virgin point of control, October 13th, all right? This is all very, very important. Let me explain just for a moment what all this stuff means. First, let's talk about the gaps, okay? Very simply, all of this stuff put together, these are all data points put together that are basically telling us that the market has gone too far, too soon, and over too short of a period of time, okay? Gaps generally in the market should fill, and it's not healthy for the market to have back-to-back gaps that are unfilled, that didn't fill any even portion of which at all. So first thing to keep in mind is you've got back-to-back gaps up in from the last 2 days, okay? This is a perfect example of what we call the piling on effect, and all this stuff kind of fits in with the piling on effect, all right? The next thing to point out is the virgin points of control. What is a virgin point of control? Very simply, the greatest amount of volume traded in the ES at a particular price level, okay? That is the point of control. It can also be measured by time, where the greatest amount of time spent. And if you think about it, that's where traders have deemed the greatest amount, I should say, of value. The price where the most futures contracts changed hands is obviously the fairest price to do business that particular day, because it fulfilled the objective of the market, which is to distribute futures contracts better than any other price level. So think of that, okay? Now, the way the markets work is these points of control where there are high volume nodes, they should get tested. The market should move away from them, explore to new areas of price, okay? But then come back in and test those higher volume areas. If those high volume areas are not tested in subsequent sessions, then we call them virgin points of control, or VPOCs. When the VPOCs start to stack up below us, and we've only got a couple here, so it's not that big of a problem, but it's also noteworthy when these VPOCs go back to back. So keep that in mind, in that in the last three, I should say, RTH sessions, the virgin points of control did not come back and get tested, okay? So keep that in mind as well, all right? Next, you notice in the chart that I talked about single prints. What are single prints? And here I'm just going to make the chart a little bit bigger here. Single print sections are essentially these areas in the chart where it's very, very skinny, just like this. And I don't have the chart set properly, so you don't see all the letters. You just see kind of the histogram here. But that's the single print section. And notice here how low the volume is in the single print section. And sometimes there are single prints for long sections, and sometimes there's single prints for short sections, correct? But either way, there always should be paid attention to. You can see here that you've got some singles here, top and bottom. Then there's a little bit of a thicker distribution. And then you've got singles again. Top of the single prints all the way down to the bottom. These are areas that tell us that the market basically acted very, very emotional during those times, meaning that very, very little time was spent in those price areas and the market just zoomed forward. 99% of the time, this is due to short covering. These are people just hitting the button, not using their heads, or stops getting triggered, etc. And you want to keep this in mind, that this is the type of price action that we had a lot of over the last couple of sessions, where we left a lot of these single prints in our wake. Next, I want to talk a little bit about volume. Okay, the volume has been very low for the last 2 sessions. I've got volume at every single price here. And notice here, this is Friday. At the end of the day, 895,000 contracts traded. That's very, very low. Generally, you want to see way more than 1 million. On a higher volume day, you would see 1 million contracts by midday. So by the end of the day, only 895,000 contracts traded in the ES. And let's go back to the prior day. Let's show you Thursday. Look at how small this one is as well. 970,000 contracts traded. So again, this is kind of low, and it's also low at each price. I call that the phenomenon of taper. Notice that, see here, no 10,000 prints, and you've got small numbers here. You move up through the entire day, and you don't have, there you've got it there, 10,000 contracts. You barely have 10,000 contracts anywhere during the course of the day. Here you've got lots of it, but look at how much of the day was spent with less than 10,000 contracts. Generally, in a normal type of profile, you should see the 10,000 contract print or more almost all the way through the entire profile. Last but not least, I want to also point out the structure on Thursday. This is very, very nuanced, and it's really just one data point. And I always tell people, don't hang your hat or your market profile analysis on structural deficiencies, but they are things you should carry forward. Look at how the distribution here on Thursday is split, where you have single prints here in the middle, top, bottom, and then here, again, you don't see it because I don't have it set properly, but this is a little bit wider distribution here, B and C period, but then look, it gets down to single prints again. So again, this is just an example of the way you don't want it to look. And then look here. I didn't mark it off, but you've got single prints in between. I actually failed to mark that off. I apologize. But look, single prints in between. And what does that do is it basically separates these distributions into multiple parts. And when you see that, you want to treat each distribution as if it was a separate day and then sort of gauge the market as to where the acceptance of price is found in subsequent days in either the upper distributions or the lower distributions. But in a nutshell, keep in mind that this type of structure is not good. But again, just one data point. Another concept inside of the market profile that is very, very indicative of what we call the piling on effect, and that's what this whole section of the video is about, is just saying that the market is dangerously long in a very short-term basis. It doesn't mean that it can't go higher or that the trend is not to the upside, but on a very short-term basis in terms of how we analyze the distribution of ES futures contract across the spectrum of time, the market is dangerously long. One of the things that I look at a lot is overnight inventory. Basically, you'll notice on these market profile charts that you have capital letters here in the RTH sessions, and these yellow boxes are the value areas. That's where 70% of the day's volume went off. The red squares are the settlements. And the overnight sessions are split out, meaning that I give them their own distribution. And this is really, really important in terms of analyzing what the market has done overnight and what you think it's going to do the next morning, is to look at these overnight sessions separately. So I always do that. It's important. And one of the concepts that I teach in pre-market perspective and anytime I'm looking at market profile is simply, where is the overnight inventory in relation to the prior day's settlement? So depending on, is it all of it above, like did the market close on a Wednesday and then all of the overnight activity on Thursday, Wednesday night into Thursday morning was above the settlement? Was it mixed, where it was on both sides, where the futures were up and down, red, green, over the course of the evening, and then who knows wherever they open? Or was it all bearish, where all of the overnight inventory, meaning that all of the trading in the overnight session was below the settlement? Okay, so we check every morning to see how much of this overnight activity is either above or below the settlement, like what type of percentage. And what we mainly concern ourselves with are the extreme days where the overnight inventory is 100% net long. Means that 100% of the overnight inventory, which is, as you can see here, the lowercase letters, they are where in relation to the settlement? All above. So this is what we call being 100% net long overnight inventory, okay? That's okay. But what it needs to do is correct a little bit. It's generally unsustainable, and you want to think of these overnight players as weaker hands. So over the last couple of days of the week, Thursday and Friday, much of the gains were made when? In the overnight session, and very little of that trade was retraced at all. There was almost no inventory correction. And again, as far as overnight activity is concerned, the same thing happened between Thursday's session and Friday's session, right? Notice here that this is all of the overnight activity on Thursday night leading into the Friday session. This is the regular trading hours session for Friday. And again, where is it in relation to the settlement? Not 100% net long. Notice that your settlement is here. at the small red dot. So you do have this amount of inventory that happened below the settlement. But really, if you look at it, it's higher than 90% or so. The majority of time was spent in all these TPOs that printed way above the settlement. As you can see, very little retracement back down, leaving this very, very large gap in the market. All right, so this is all important. And the main takeaway that I want you to have from this entire section of the presentation is very simply that these are all single data points that go into a narrative that you build every morning if you look at this profile every day. If you're interested in this type of analysis, I do write a report on it every single morning that comes to your email at 9 a.m. sharp, or you can just read it on our website about 30 minutes before the market opens. And you can take a 5-day free trial to it all the time. Just hit that little link up there over my left shoulder over there, and you can take a 5-day free trial. It's called Peter's Pre-Market Perspective. Extremely reasonable. I only charge $20 a month for that, and it comes out every day. And basically, I will tell you every day what the situation is with overnight inventory, where we are slated to open, what are some scenarios that may play out in terms of how the day may unfold, and very importantly, what are all of the key levels that you need to be looking for if you're an active futures trader, or really just even a long-term trader that's looking to hone your entries better. I give you all of the key levels that are very nuanced that a lot of people don't see for that particular trading day, such as tops and bottoms of single prints, points of control, where are the extremes of the value area, et cetera, et cetera. All of this is information that no regular OHLC or candlestick chart is going to show you. This is all information that's a little bit more underneath the hood using these market profile charts. And people who have been following my service for a long time, constantly email me that these levels are very, very important. It happens all the time. As I'm trading during the course of the day and I'm pointing things out in the weekly options advisory and sending people alerts, very often I will grab small snapshots of this chart and just show people very nuanced levels and say, hey, heads up, we've got a poor high developing, or heads up, we're coming down to the top of these single prints, et cetera, et cetera. And very, very often these areas are inflection points. And people who don't watch these charts and aren't on top of market profile often are baffled when they try to trade futures full time because they don't know and understand where these turning points lie or why the market is actually doing what it's doing, when very, very often it is really just reacting to a lot of the nuances that are here in the market profile chart. Now let's recap some of the key concepts that we talked about in this video, starting from a kind of a macro view on down to the more micro view that we just looked at with the market profile. 1, S&P 500, very bullish. Looks like it's going back to the all-time high. Path of least resistance is to the upside. Point 2, NASDAQ 100. Okay, looking a lot more bullish than it was, but with that resistance above us of the 50-period moving average on the daily and the 61.8% retracement on the fib. So keep that in mind. Point number 3, Russell. Very, very weak. Is it a leading indicator or is it not? It's one data point of many, but the reversal was very, very big on Friday and it completely fell apart. We've been seeing this type of price action for a while now in the Russell, as it has stayed in that huge channel that's been going on like 8 months now. So the market can move without the Russell, but again, would it be more bullish if all of the indices were pulling in the same direction? Yes, I would say that it would be. All right. Market profile, dangerously overbought in the near term. I don't think it's a good time for new long entries right now. Given what we saw in the profile, I would like to see some sort of a liquidation break or corrective activity to come in, repair some of that structure where those single prints are, et cetera, VPOCs, et cetera, gaps, all of that. Keep all of that in mind. Doesn't mean the market is going to go down, doesn't mean that it has to go down. It's just that you should be aware of all of these nuances as they are playing out so that you can build your narrative as you go, and it gives you a really good idea as to, how bullish or how bearish the market is, okay? Next week, Tesla and Netflix are going to be reporting. For me, that means hands off for those particular names. So I'll be focusing on others such as Amazon, Google, Apple, etc., that are reporting the week after. Fangman plus T earnings are starting to get in gear. Obviously, those first two are going to kick off next week. That's generally a time for me, whenever those names report, I will not do a weekly options trade in that name leading up to it. It's just not my MO. I just tend to like to sit those out and, just kind of watch from the sidelines. So how much of an effect will those particular earnings have on the NASDAQ next week? Hard to say at this point, but it's definitely going to be yet another data point to bring into your narrative. So watch Netflix and watch Tesla next week, all right? Looking forward a little bit further, my personal opinion on what is going on in the markets here in terms of how bullish, how bearish it's going to be, et cetera, is any really bad earnings reports from these Fangman plus T notwithstanding, because I don't know, I'm not saying we're going to get that or not get that or what, I have no idea, but if everything sails through the Fangman plus T earnings in the next couple of weeks, I believe the market should stay bullish throughout the rest of October, given what we've seen technically and how the trends have broken in the S&P and the NASDAQ. We'll see if the NASDAQ can close a bar up above that 61.8, up above the 50, we shall see. But in general, trends are looking a lot more bullish now. That inverted head and shoulders that I talked about last week forming is certainly playing out, and it looks like that pattern is leading to higher prices. The reason I say just until the end of October is, and this is important, remember November 3rd is the next FOMC meeting, and this is one that I've been talking about for a while that I think is going to be big because it will be the definitive start of the taper of bond buying. And this is the first time in a very long time that the FOMC has done anything even remotely hawkish. Remember, they talk a lot, you parse their statements, et cetera, but talking and doing are two completely separate things. And this is where they start to get into gear and start to actually be doing something. And it's really not known how the market is going to react to that. Me personally, I believe the market is going to react to that negatively. And as we get closer and closer to November 3rd, I do not want to have any positions on where I have long debit exposure or call exposure or anything like that that's going to get really hurt if the market was to come in a little bit. All right. Last but not least, quick reminder, as I talked about earlier, I would love to send you my recaps of all of the trades that I send out every day, all of the alerts, all of the heads ups about everything, what's Peter thinking, audio message, all of that. Remember, every day I send that email that I showed you earlier, all in a recap to all of my subscribers. All you have to do is hit this link right here, shadowtrader.net/track record, and you'll get that email all next week. And also, obviously, the track record of the advisory is in that email. And in looking at that closely, as I always say, feel free to go through and reverse engineer any of the trades, and maybe you'll get a better handle on what I actually do and what my techniques are and how I do it. And as you go through that performance sheet, you'll see Myrna. Don't think I've forgotten about Myrna. I know I told you guys that Myrna was, shaping up to be a big loss for us. We haven't closed it yet. We're still kind of fighting it. We're trying to recoup some of that debit, but feel free, go in there. Myrna is trade number 747. So scroll down when you look into the performance, and you'll see all the trades that I've done in Myrna and what I currently have open in Myrna, because I've made some adjustments just today on Friday in the spirit of trying to get some of that debit back. So again, that link is right down here, shadowtrader.net/track record. And again, I'll send you that recap email every day, all next week. Last but not least, please don't forget to hit the like button and subscribe to this channel. If you do one thing this entire weekend, please let it be that you hit the like button on this video, okay? It helps me out a lot, pumps up the YouTube algo. I think they like it when we get a lot of likes. And even more importantly, think of how good you're gonna look Monday morning at your office, water cooler conversation or whatever, when everybody's saying, hey, what'd you do this weekend? And then you say, I watched the Shadow Trader video weekly and I hit the like button. Whoa, right? I mean, you're going to be the hero. So anyway, all right. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.